Welcome to Get Rich Slow with John Wolf. Hey, I just wanted to go over with you the 10 most common credit misconceptions that I hear relatively often, and a bunch of them just hurt my heart because they really steer people in the wrong direction. But first off, I'm a licensed loan officer in Oregon and Washington, so if you want help getting a home, please hit me up. There's all my license info. Anyways, one of the things that kind of makes me the most angry when I hear is, hey, can you do a soft credit pull? Oh, they're going to do a soft credit pull, kind of any variation of soft credit pull. If you hear that from somebody, you should stand up and walk away and never talk to them again because they are directly lying to you. If you are selling a client a good or service and you pull credit, you can only do a hard credit pull. Now, one important exception is my friends in the auto and other insurance industry. They pull a different kind of score that isn't a credit score at all. But otherwise, contractually, every other way, you can only pull a hard score. Second thing I hear a lot, and it's a frequent reason people delay doing what they really want to do, is they'll say something like, a bill collector, a bill collector told me that after I finally pay off this collection, they'll remove it from my credit and my credit score will go up. That is almost entirely and always totally untrue. So sort of similar to the last one, contractually and procedurally, if somebody legitimately owns a debt like a phone bill that they got behind on or something, the phone bill company cannot remove the late payments off of their credit history unless the bill was incorrect in the first place. Like if it was an error, it can be removed. But if you owed the money, they put it on your credit, it'll just go from showing as a collection to a paid collection, which oftentimes actually decreases your credit score. And that's simply because you took an old bad mark and now it got newly paid now. So it's a new bad mark. So the aging away on your credit score gets reset. There are two really important exceptions. Medical bills can actually remove. A medical collector can choose to remove it for you after you've paid it. As always, when you're talking to collectors, get all your promises in writing or recorded or some other means of surety. The second exception is very narrow, and it's for military circumstance personnel when their deployment had a direct connection to why they missed the bill. I guess if you're often serving in some part of the world and you cannot respond to a bill and it goes late because of that, and then you come back and you pay it, then that can be removed. But there's a proper procedure for doing that. The next one is number 3, free credit reports. So the most common one people hear about is Credit Karma. Now, I just want everybody to understand, all these free reports are not giving you your FICO score. They usually give you what's called your advantage score, which is sort of an algorithm they just made up. It is sometimes close to real credit score and sometimes very far off. I've actually seen people's real credit score for buying houses be 100 points higher and 100 points lower than what Credit Karma says. And I do want you to understand where Credit Karma and all of the freebies you might get from credit card companies, I want you to understand where those are coming from. So Credit Karma is an advertising agency. They make a very handsome referral fee every time they convince you to sign up for a loan or a credit card. That's their job. Their job is not to help you with your credit, although they do give you some decent information, but they don't really give you all the right information and signals all the time. Okay, number 4, paying a collection will improve your credit. So this is almost never true. Like I said before, usually if you pay off a collection, your credit score will at least temporarily go down. There is a second step that you can take after that. And if we end up working together, I'll explain you through that process. Number 5 is, I got a raise, so my credit score is going to increase. It's the idea that your income affects your credit score whatsoever. So other than your balance on credit cards, and it's just the difference between how much you owe and your maximum balance, your total number of loans, and just your ability to actually just pay every bill on time, your income does not affect your credit score whatsoever. You can have a perfect credit score up in the 800s with a $25,000 a year personal income, and you can have the same credit score if you're making $1 million a year and everything in between. And it could be bad anywhere in between. Just income isn't even listed on the credit report. It's not part of the calculation, nothing to do with each other. So this one is paying a credit card will lower my credit score, or paying off a loan will lower my credit score. So that's almost entirely untrue. On the credit card side, there's a tiny glint of reality. And it really goes to people who are really trying to maximize their credit score when it's low. So listen up. So if you like are starting from nowhere and you have no credit at all, the fastest way to get a good credit score by yourself is to get 3 credit cards. It doesn't matter if they're like $250 max balance prepaid cards. It doesn't matter at all. And then what you want to do is just create activity every month. So go buy the cheapest item you can find once a month with each card, something you need anyways, like a milk, and then set it to automatic payment, pay off, and let it pay off every month. Because showing activity actually gives you a better score, and actually having a balance statement above 0 every month gives you a better score. But I mean like $1 above 0, $12 above 0. Once your balance gets over 25% of the maximum, your credit score actually starts to go down considerably. The other things you can do is, if you already own a car that you could get a loan on, sometimes getting an auto loan and then paying it off in 1 year is a great way to boost your credit up by yourself. But the fastest way to get a good credit score is if you have a really, really good friend or family member who has a credit card they don't owe anything on. It's been alive for more than a year. It's never had a late payment. The longer, the better, as far as how long it's been around. If they make you an authorized user on that card, you will instantly pull forward with all their history. I have actually, my wife had an 800 something credit score, and the only thing on her credit bureau was that she was an authorized user on a gas card that had been opened in the 50s. The only thing. So one credit card that's not nearly that old won't have that effect, but it gives you the idea of how powerful that can be, just pulling someone's credit score up. Another one, pulling your credit will lower your credit score. Well, that's absolutely true, but that's not true the way people think it's true. So if I pull your credit today, we'll get a number, and that number already has the decreased points chipped off. And you're going to lose somewhere between 0 and 4 points. I have not been able to figure out any rhyme or reason between why and which one. But another good thing you should really know is if you are shopping within the same service provider type, like you could literally go to 8 car dealerships and have 8, Honda, Toyota, Nissan, whatever, they can all pull your credit. It counts as one pull. You don't lose 4 points, 4 points, 4 points, 4 points. You lose 1 or 2 points, and then you don't lose any more. And that's for a 30-day period. And the same thing goes for a mortgage loan, things like that. Now, there's one really important thing you need to know about that. And the only place I've seen it show up is actually at the auto dealership. So the auto dealership, if you're shopping at an auto dealership, is going to pull your credit once so they can see the score. And then when they go to try to figure out where they can send your loan, which is usually some local credit union, or it could be, Chrysler Bank or Honda Finance or wherever, that institution will pull your score again. And it would be very prudent business for them. And it's very normal to, send the client to one credit union and and maybe the dealership bank, just 2 places. And those all count as real pulls. So it is possible that if you go to a bunch of dealerships, or if a dealership shops your credit around to a bunch of credit unions, you could lose a bunch of points on your credit. So that is just something to be aware of. Next thing is, missing one late payment isn't a big deal. Well, it's not the end of the world. You can recover. We can get that all fixed up, but it can matter a lot. So if you miss a payment, like on a little credit card, you're going to lose something like 20 to 30 points. It could be as much as 70, 80, just depending on what else is going on. But if you miss a payment on something like a car or a home, it's going to have a pretty dire impact on your credit. You can easily lose 100, 150 points, and that will take a substantial amount of time to recover. And another thing that most people don't realize is the negative hit on your credit stays pretty much new until whatever account that is has been paid off, and then it starts to age off of your credit. So whenever possible, if you miss a payment on something, satisfy it, fix it, pay it off, and then have it closed and replace it with something else, or not, depending on your situation. Anyways, credit takes a long time to build. Usually not. So I help a lot of people with their credit to do home loans, and I frequently help people get another 10, 20, 30, 40, 50, sometimes more points in a couple weeks between meeting me, them finding the house, and then starting the loan. A lot of the times I can help you increase your credit by a pretty significant margin in very little time, like a couple weeks. But if you're starting from scratch, it takes 6 months with the multiple credit cards and get one installment loan to get a decent credit score from zero. And then if you actually have bad credit, depending on the types of derogatories and how you go about handling them, it's really hard to mess up your credit bad enough that it takes more than a couple months to fix. But if you have the resources to settle the accounts. But there are a few that just really, really suck and are hard to get around. Mortgage lates, there's not really any decent way of getting rid of if you actually owe them or were late. And the other ones are student loans. And by the way, just shouting out about student loans. Student loans will let you can put student loans in forbearance basically forever. You have to keep refilling it out if you can't make the payment. But if you miss the payment, that will be a very hard black mark on your credit until the loan gets paid off, which is going to be a very long time in most instances. So the missing student loan payments or not realizing when the student loan payments are going to start is a huge downer on a bunch of people's credit that I try to help that I don't have a ready-made easy solution for. You have to just fight your way out of that over a long period of time usually. And the last one, joint credit scores. Married people have joint credit scores. Well, that doesn't mean what people think it means. So if you have a husband and a wife and only one of them want to go on the loan or whatever for whatever reason, then I pull an individual credit report. I only get the husband or wife's info, and I pay, by the way, about $25 to pull your credit every time. And that's why it kind of goes to show you that the Credit Karma free credit report thing isn't real, because they can't be affording $25 every time you look at it. It's because they're not actually pulling your credit. But I digress. And then there's a joint credit report. So if a husband and wife, and it's only a husband and wife that are allowed to do joint credit reports, or I suppose husband and husband or wife and wife. But it's really just a discount for me. So I can pull two scores together in this kind of funny merged pattern, and I only have to pay $35 or so. It doesn't actually affect either individual person's credit score at all. You don't get to average them together. There's still two people that each have 3 scores each. And as the way that calculating credit for home loans works, the number that counts for the risk assessment and the pricing is the middle of the 3 scores, whatever that number is. And if there's 2 people, it's the lower middle score. It's a little bit convenient also for me to pull a joint credit report, because then I don't have to edit between the items if both of you are on the same account. I don't have to delete the duplicate, but that's it. Well, hey, anyways, this has been super fun. If you have questions, because I have only covered a tiny bit of what's out there, please leave a comment. Also, like, share, and subscribe if you like this content. Have an awesome day.